From the beginning of time, man has always had a pursuit of the best quality of life possible. That quality of life is not possible without resources. The form of resources we have accumulated has changed over time from cowrie shells, state-controlled money, precious metals, real estate, and stocks and bonds. Over the past 100 years, the world has been dominated by the US dollar and its reserves. But everything that has a beginning also has an end. A new financial revolution is upon us with the emergence of a digital economy. The way we earn, spend, and accumulate resources is fundamentally changing. A new asset has appeared that the wealthy have overlooked. Bitcoin has become the best performing asset of the past decade by far. With only 21 million ever in existence, there are more millionaires and billionaires in the world today than there are Bitcoin. Just by holding 0.25 Bitcoin today, will put you in the top 1% asset holders in the world in the next 5 to 10 years. If you had invested $100,000 in Bitcoin in 2013, today it will be worth more than $15 million. Bitcoin billionaire Raoul Pal says, Bitcoin's performance is so dominant and so all-encompassing that it is going to suck in every single asset narrative dry and spit it out. Never before in my career have I seen a trade so dominant that holding any other assets makes almost no sense. This is not an industry you can afford to ignore. If you want to remain in business, then you must adapt. Are you offering services in Bitcoin? Are you accepting payments with digital currencies? Have you adopted blockchain technology? Blockbuster Video at one point was the most dominant video service in the world. They had the opportunity to be part of Netflix, but they ignored the changing technology. Where is Blockbuster today? Where will you be tomorrow? All right. Good evening, everybody. Welcome to a special broadcast of Crypto Talk on Saturday night. This is Bitcoin Brandon Ivy from Los Angeles, California. I am the CEO and founder of ILCA, Ivy League Crypto Academy. And tonight is special because we're going to continue a series that we started last Saturday about the Digital Dollar Project white paper, which is a private organization that is proposing what the CBDC in the United States should look like and give recommendations if the United States government makes the final decision to go forward with this. What I already say is that the decision's already been made. It's not a matter of if, it's a matter of when. And now they're just getting the public prepared for it, used to it. You know, they can't just drop it on you out of the blue. They got to lead into it, ease up on it just a little bit. And today's been an interesting day as well, the last 24 hours. We saw a major, well, I don't know if you can call it a major U.S. bank, but it is the second biggest financial crash bank since 2008. So this is a big deal. And I've been watching the markets to see how this is going to impact USDC crypto. And I'm noticing that crypto is rebounding very well. It is up 0.3% since this morning. We're back up to 981 billion. It's almost, well, let me share screen so you guys can see what I see. So yeah, we're back up to 981 billion. Bitcoin dominance is at 40.3%. Ethereum is at 18%. Bitcoin in the past 4 hours up 1.1%, 0.2% in the hour. Ethereum's up 2%, 24 hours, down slightly in the past hour. But I've been watching also this USDC coin. This morning it was at 90 cents, 91 cents. Now it's back up to 96 cents. Like I told you guys, this is going to bounce up. So I answered my question. I was going to wait a little bit, because I had a decision to make. I said it this morning. Those of you on Crypto Talk this morning, which direction was I going to go with this, and I decided, let me wait. Let me not make a drastic move and move my coins from USDC to USDT. I know that there's only 6% holdings of Circle USDC in the Silicon Valley Bank, so it's not impacting them at all. So yeah, it's bouncing right back up. But the big test is going to be tomorrow morning. Wait a minute, isn't tomorrow morning Sunday? Well, not for Asia. Tomorrow, Sunday afternoon, it is going to be Monday morning in Asia. And when those markets open up, we'll see how they respond to this. And then we got to look at 8 a.m. Eastern time, 5 a.m. my time. We'll see how the United States markets, when the stock exchange reacts to the banking crisis that happened on Friday. It's going to be about the people. Will the people panic? Is this a domino effect, a cascading effect, or isolated? Or better yet, will everybody from SBC be made whole? Any holdings over $250,000, will they have access to 100% of their funds? Is going to be a big difference. If it does not, no, this isn't something that happens every day in the United States, although it has happened before. Will the people figure out, wait a minute, you mean to tell me my money really isn't safe in a bank? That if there's a bank crisis and I have more than $250,000 there, that I'm going to lose it? So even though that's already how it is right now, most people don't know this. They don't understand that. They think if my money's in the bank, the government's got it and it is never, I'm never going to lose it. They don't understand how money actually works. So if they don't make everybody whole, it is going to send shockwaves across the market and other banks. And it's going to cause people that have money in other banks to do something else with their extra money. Millionaires and billionaires already know this. They already know, I'm not putting all my money in a bank. No, they put it in assets and things that they actually can control, or create their own banks with their own hedge funds and insurance company. They call it the family bank, the family company. All right, so I'm still going to be watching this closely. But USDC, let's see if this gets back to that one-to-one peg, which I believe it will sooner rather than later. And the rest of the market is also reacting. So tonight, the Digital Dollar Project white paper. What do we get to? I think page 10 last Saturday. And originally, I was only going to skim through this, but I'm like, no, I need to read every single word of this. Let's see, where did we leave off? Right here. Yeah, we did this token of third format. Oh yeah, okay. If we did, I'm going to read this part again. This is important. All right. The DDP, Digital Dollar Project, believes that the United States should explore the opportunities and challenges of a digital dollar that is anchored in the core characteristics of our champion model. This is their champion model. Tokenization. A U.S. CBDC will be a tokenized form of the U.S. dollar. Third format of currency. A U.S. CBDC will operate alongside. So this is not getting rid of it. Getting rid of physical money is to operate alongside it. Physical fiat currency and commercial bank money. Most of you are not familiar with that term, commercial bank money. There's three forms of money in the world, and most people only have access to one, which is the cash you have. But that's a big thing. Commercial bank money. That is actually what probably kind of caused the crash of this bank. The bank was a victim of the Fed raising the interest rate, and it messed up their government bonds, and they lost $1.3 billion. Maintenance of the two-tiered banking system. The U.S. CBDC will be distributed through the existing two-tiered architecture of commercial banks and regulated financial technology and payments intermediaries. Privacy. The US CBDC will support a balance between individual privacy rights and necessary compliance and regulatory processes decided upon by policymakers and ultimately reflecting the jurisprudence around the Fourth Amendment. This is huge. For any CBDC to pass in the United States outside of a massive crisis, this has to be key. Monetary policy neutral. A U.S. CBDC will not impact the Federal Reserve's ability to affect monetary policy and control inflation. In other words, they're saying the Federal Reserve can print more cash anytime they want to. We don't want to take that away from them. Technology decisions and design choices driven by functional needs. The policy and economic requirements of the U.S. CBDC will inform both the underlying technology and ultimate design choices. Future-proofing the architecture through flexibility. The chosen technology architecture will offer the flexibility to adapt configurability based on policy and economic considerations. And then continued private sector innovation. That is also key. Right now, our regulators are everything that they do, it is not fostering innovation at all. It's the opposite. A US CBDC will act as a catalyst for innovation and will not be antithetical to the development of private sector initiatives. That's a big deal right there. So the status of the global CBDC, research and development, key trends and contrasts. What's going on around the world? So according to the Atlantic Council Geoeconomics Center, 114 countries are at various stages of CBDC exploration, and 11 countries have already issued a CBDC as of January 2023. Back in May 2020, it was just 35 countries that were exploring it, and none had deployed a CBDC. See how much has changed in 2.5 years? Global CBDC deployments are likely to increase exponentially in the next 12 to 24 months. Oh yeah, we did cover this. So, but I'll do it again. I remember because I remember why this is important. What's going to happen in the next 12 to 24 months? The Bitcoin halving is going to take place. The entire crypto market will be going back into bull season. The Atlantic Council Geoeconomic Center also found that a new high of 60 countries are in advanced phases of exploration. 60 countries are in advanced phases, meaning developing, piloting, or launching CBDCs. The Official Monetary and Financial Institutions Forum found that 2/3 of central banks surveyed in November 2022 said they would issue a CBDC within 10 years. And 24 central banks responded that they would issue a CBDC within just 1 to 2 years. As of January 2023, the central banks of 11 countries or currency unions, the Bahamas, Nigeria, Jamaica, and the Eastern Caribbean as central bank, have developed a CBDC. It is more important than ever for the U.S. private sector to understand global CBDC trends, as the chart above from the Atlantic Council Geoeconomics Center and data from the OMFIF illustrate. CBDCs are already in deployment in several jurisdictions and will become increasingly commonplace in the next few years. Do you see that? Increasingly commonplace. To that end, we offer 3 observations on trends and contrasts in current CBDC developments. Observation 1. Central banks are laser focused on improving domestic payments efficiency with a growing emphasis on cross-border payments that could lead to a new global financial order. Observation 2. Research suggests CBDCs could benefit financial stability. That is true. CBDCs hold promise for bolstering, but more data and bolder leadership to access are needed to. here. So revisiting the original DDP tenets for a digital dollar. CBDC was a relatively new concept when the DDP was published its initial white paper in May 2020. Still, there was enough research, global evidence, and experiential perspective to develop a champion challenger approach to DDP's piloting and experimentation. Through a range of expert interviews and with input from the advisory group, DDP proposed for public consideration a champion model of a US CBDC that we hypothesized could provide significant economic and social benefits. Public comments and recent research and development efforts, as discussed below, confirm the tenets' continued relevance. We therefore plan to continue to anchor our private sector exploration of a digital dollar in these tenets, and recommend that the U.S. government explore a digital dollar in a similar manner. Tokenization. A core tenet of the DDP's champion model is tokenized architecture. We hypothesize that a token-based digital dollar would not require third-party intervention to be verified and transferred, a significant departure from today's account-based transactions. This is because a digital dollar would be actual money in the form of a digital token, a bearer instrument. The DDP believes that a tokenized dollar could provide new levels of portability, efficiency, and accessibility. Much of today's global economy is based on electronic transactions such as automated clearinghouse payments, wire transfers, and app-based transfers. While these transactions are undoubtedly electronic, the money being exchanged is very different from a tokenized digital dollar. The money being exchanged in today's electronic transactions is actually account-based money that financial institutions hold on behalf of the money's owners. Account-based transactions are a series of messages from one participant's bank to the other's bank verifying the transaction. The two banks must act on behalf of both. In other words, it's like a node. That's what it's doing here. The two banks must act on behalf of both parties for the transaction to take place, and one or both institutions are likely charging a fee, of course, to conduct this outdated and time-consuming process. There is a popular view that the two major architecture choices for CBDC are token-based and account-based. If you want this to work, it's got to be token-based. This dichotomy, however, is not entirely accurate. An account-based CBDC system could include elements of tokenization, tokens inside of accounts, but this design would be unlikely to offer significant benefits from an access and inclusion perspective over the status quo. Yep, see, that's why I said it's got to be token-based. Others have noted that these two categories are insufficient to address the complexity and nuances of CBDC design choices. Project Hamilton, for example, took the view that there is no clear binary choice between token and account. Didn't I write that down to look up Project Hamilton? Took the view that there is no clear binary choice between token and account, and a team at the Federal Reserve Bank of New York argued that a CBDC could maintain the characteristics of both account-based and token-based architecture. Technical work to explore a tokenized digital dollar is underway. The team behind Project Hamilton, the Boston Fed MIT collaboration that concluded in December 2022, created a core transaction processor using two architectures, both of which were based on the unspent tokens model. The token-based model allows researchers to create a secure CBDC transaction format that prevents double spending, is non-malleable. In other words, they want to create their own blockchain. Just putting that in layman's terms. As other tokenized currencies emerge, a natively tokenized US dollar could complement the account-based FedNow and FedWire services and provide a modernized payment system. Although there are diverse payment solutions in the US, a digital dollar would be the only medium that could provide both a digital and cash-like bearer token issued by the central bank. It is, however, possible that some CBDC benefits could be idiosyncratically addressed by other solutions, but these would be point solutions, whereas a tokenized digital dollar would offer the potential for an extensible system that could provide the transactional benefits of a digital currency combined with the stability, trust, and low risk of central bank money. Further questions to tokenization include: which operational processes would need to be transformed to handle token and account-based models simultaneously? How important is the messaging about tokenization to consumers and other end users? Third format of currency. The DDP's champion model of a digital dollar would operate alongside the two existing types of central bank money. You guys understand that? That's money you don't have access to. Physical currency issued by the Fed and digital balances or reserves held by commercial banks. See, that right there is what happened to the Silicon Valley Bank. They had a cash crunch on their reserves because the interest rate was raised, and they tried to do some sales to shore it up. They lost 1.3 billion, and the FDIC stepped in. That's what happened there. It was their reserves held by commercial banks with accounts at the Fed. DDP's champion model hypothesizes that a tokenized digital dollar, would complement rather than replace either of the two existing formats of central bank money. This perspective largely aligns with the Federal Reserve Board's view. In other words, the Federal Reserve wants to make sure that they still maintain control. That's all they're saying. Saying, look, we can have the digital dollar. You guys are still in control of it. That's the whole point. And in fact, I read last year, I think it might be, I might have to do it again now because it was really about a year ago, the Federal Reserve's white paper of the future of money. I think I got to do that again. Physical cash is vital in a natural disaster or other events that disrupt our increasingly digital economy. The Federal Emergency Management Agency, FEMA, recommended that Americans keep a store of physical cash in their homes in case of a blackout or related disaster. I always keep some cash. I may not, most people don't do transactions in cash, but it's good to always have some cash on you, especially when you travel. I think I don't want to give too much away. I always have at least $1,000 cash, because you never know. You never know. And what happens when you can't use your card? Mostly I do it because I have give tips, parking, stuff like that. Especially when I'm traveling and I see these stupid toll roads in every city. Like, why am I got to pay to drive on the freeway? My tax dollars paid for the freeway. But it might be a smart idea to, get a safe in your home and have a good sizable amount of cash on hand. My grandpa, both of them were like that. They in fact, they didn't believe in the bank at all. No, my grandpa kept his cash. He said the government can't take it if they don't know where it is. So in addition to serving as a useful backup in the event of a disaster, DDP believes that cash reserves serves an important function for societal norms, and its use should be preserved. So ultimately, we're going to have a cashless society. So when not next Saturday, the 25th, I think it is, when I do the Crypto Storm is Coming, we'll talk about what ways will the government use to get rid of physical cash. Because ultimately, the government wants full control. As long as you have cash, they can't track your money. They track your money by using your debit cards, your credit cards, looking at your bank account. So one thing I'll give this away. There's a movement that's saying, and I don't know how true this is, but I guess they said 90% of US dollars in circulation has some form of trace of drugs, cocaine, amphetamine, or something on it. In other words, they're saying the cash is dirty. Always wash your hands after you deal with money. So they could use that, saying we need to get rid of that. Let's see here. Maintenance of the two-tiered banking system. This is also important for the Federal Reserve. The DDP's champion model of a digital dollar would be distributed to the general public by commercial banks and other regulated payments and financial technology entities. These firms, including regulated non-banks, would exchange reserves for digital dollars to be distributed to end users, similar to how ATMs function today. The vast majority of central banks that are exploring a CBDC as of January 2023 generally share the view of this tenet, as reflected by research from the BIS. A BIS survey found that over 70% of central banks that are exploring CBDCs are considering a two-tier distribution model instead of a direct model that would essentially establish direct retail banking accounts for consumers at the central bank. That's what the Federal Reserve wants. Many of these central banks have stated their view that the private sector should continue to provide customary procedures such as KYC and anti-money laundering checks. Only problem with that, the Federal Reserve will say, well, yeah, we let you private banks do that. Look what happened with Silicon Valley Bank. I think if we had it in our control, people's money would be more safe. That's another excuse that will be used. Central banks are evaluating various policy and design choices to minimize potential impacts on the banking system. For example, some central banks have decided that users' CBDC holdings will be non-interest bearing. Oh, hold up. Non-interest bearing. So right now, at least my money in a bank is interest bearing, even though it's only, a penny, a couple of pennies. You're telling me that is non-interest bearing, period? You're just holding it, which means I'm really losing value every single day as inflation kicks in. Like Robert Kiyosaki said, it's economically foolhardy to leave your money in a bank. You got to put it somewhere that is going to work for you. Others are exploring the concept of limits on users' CBDC balances, with any excess funds spilling over automatically into bank accounts. Whoa. I think Europe tried this, or the UK is trying this. You can only have $10,000 of the virtual currency or the CBDC. I don't know how legal that can, well, they're saying any extra will spill over into bank accounts, excess funds. Is that legal though? To say we're putting a limit on how much money you can have, or does it matter? It depends on the form of it. If the United States policymakers may consider excluding digital dollars from Federal Deposit Insurance, FDIC, as an additional measure to maintain the health of the banking system. Exclude it? So if you're going to exclude it from being insured, why am I going to let you hold it? In the context of the United States, the Federal Reserve Board outlined that an intermediated CBDC would best serve the needs of the country. The board suggested that commercial banks and regulated non-bank financial services providers would facilitate the management of customer CBDC holdings and payments by offering wallet and account services. The CBDC itself, distributed through these intermediates, would remain a liability of the Fed and therefore a third format of central bank money. Not only would a two-tier distribution model benefit from adopting some existing private sector services and identity verification capabilities, but it would also enable private sector innovation while minimizing any potential destabilizing effects on the existing financial system. The DDP notes that the impact of CBDC on the financial sector will largely depend on the design and deployment of the CBDC network. Decisions such as issuing a non-interest-bearing CBDC and not providing FDIC insurance over CBDC tokens could mitigate any adverse impacts of CBDC and maintain the existing cash usage model. So further questions about the maintenance of the two-tiered banking system include: how might a U.S. from existing intermediated banking system deficiencies such as KYC, AML, and password recovery? Are there alternative KYC designs that better safeguard privacy? Where are the gaps that will require new regulation? How can payments and financial technology companies expand access and inclusion through digital wallet products and services? How might the two-tier distribution model offer stronger privacy protections for consumers using CBDC? Okay, yeah, I do want to look at this one in detail. Privacy. This is the biggest. This will be the biggest challenge to CBDC in America. Privacy. So we need to know what they're talking about here. The DDP unequivocally believes that privacy, a fundamental democratic ideal, is among the core principles underlying the potential success and adoption of a digital dollar. I agree. In 2021, the DDP and its privacy working group published Privacy Principles for a Digital Dollar, which sought to begin the evaluation of the technical design and public policy choices that must be understood to ensure that any CBDC system is built with privacy in mind. China's ECNY has loomed large in the global CBDC discussion. The United States should act to address the geopolitical and economic challenges posed by the rise of China's ECNY. How am I going to say that for short? I don't want to say ECNY. Now, this is why I always state, guys, especially in our crypto talks, that you've got to pay attention to what's going on with geopolitics. That's why I cover it in crypto talks. But what does this have to do with it? What is the Biden administration or the Trump and the Republicans and what McCarthy and Ukraine? What does all that have to do with crypto? A lot. A lot. So if they're paying attention to this, you need to pay attention to it as well. It says it should only do so in a way that maintains and enhances the value of a free society. See, China's version is doing the opposite. It's trying to maintain communism. But ours, we got to do it in a way that it maintains and enhances the values of a free society. But that's another word. What does that mean? What are the values of a free society? If I was a professor, that would be an essay question. I would have. Write to me in a 3-page report, 3 to 5 page report. What are the values of a free society? The challenges posed by the ECNY call for the United States to lead in setting global standards for CBDC, just as it was a leader in setting the standards for the first wave of the internet. And the United States is not doing that right now. Do you know who is? Japan, South Korea, and surprise, surprise, the UK. They are purposely saying we want to lead the way. The United States is so far behind. The United States should continue its CBDC exploration in a way that promotes democratic values of individual liberty, freedom of speech, personal privacy, limited government, and the rule of law. Some of those ideals are set out in the U.S. Constitution, including freedom of speech, assembly, and worship, and the Fourth Amendment's right to personal privacy. That's why I said that depending on how this breaks up with the CBDC, it could be unconstitutional. So they got to watch that very, very closely. From that amendment stems a body of jurisprudence defining the balance between an individual's right to privacy and the federal government's limited ability to abridge that privacy in pursuit of legitimate law enforcement, national defense, or other overriding objectives. Although a right to financial and information privacy is not explicitly established by the Fourth Amendment, for the last half century, courts have generally protected privacy using a doctrine called reasonable expectation of privacy. Even so, Fourth Amendment privacy protections have been eroded considerably since the attacks of September 11, 2001. In fact, no account-based financial transactions are truly private because in every case, they require personal identity as a prerequisite. The consideration of a U.S. CBDC presents a once-in-a-generation opportunity for Americans to reconsider the state of their financial privacy. The government is already thinking of this. This is why I said on the crypto storm is coming. They're going to get around all this by taking advantage of a crisis. The only way they were able to do all that stuff was because of 9/11. If there was no 9/11, they wouldn't have been able to erode on all the privacy laws that they did back then. But 9/11 happened and the people accepted willingly because we want to be safe. They need another one. I think I hate to say it. But I hate to say it, but I got to say it. For all of this to go down, they need another 9/11 or something as big. It doesn't really have to be the cost of human lives, but something, a 9/11 financially needs to happen for all of this to take place. And I am of the opinion, not of fact. I want to make sure I separate the two. Some of you guys believe that your opinion is fact. I don't. It's just my opinion. I believe that we are at the beginning of a setup. Everything is falling into place for the big explosion to happen. And we're watching this live. I just don't know when. I don't know where. I don't know how. Reasonable may mean when we need to, we can erase the Fourth Amendment. To them, if it's under the guise of national security, that's what they'll say. With the proper Fourth Amendment jurisprudence and thoughtful design choices relating to anonymity and individual privacy, a U.S. CBDC could well enjoy superior privacy protections than many competing instruments, whether provided by commercial interests or other sovereigns. A U.S. CBDC may have certain advantages over private stablecoins. How so? If it is properly and affirmatively bound by constitutional Fourth Amendment protections to which private stablecoins would not be subject. Okay, well, the problem with that is, even if you say so, the CBDC has to be housed somewhere. It's got to be, who's holding it? The banks? Do you have your own private wallet that the government doesn't have access to? Because the government can freeze your account, and they do so for many reasons. They say deadbeat dads is not paying their child support. What do the government can do? Garnish your wages. You don't pay your taxes. What can the government do? Freeze and take your bank accounts. That means that, and that's with fiat money. So they can do the same thing on a bigger scale if they get away from fiat and everybody's using a CBDC. Bankruptcy. I don't know how they're going to do. How are you going to tie more Fourth Amendment rights to a CBDC that's controlled by the government? Like I showed earlier this morning, how the state of California is giving out these Visa California cards. If they have money on it, they can take that money whenever they want to. The United States has the opportunity to lead in a way consistent with its core ideas. I agree with that. A U.S. CBDC could be constructed to provide privacy to citizens by maintaining a two-tiered banking system where banks, fintechs, and other service providers conduct identity verifications, just as they do in today's model. Identity verifications could be tiered and specific to the type of activity that customers are conducting. Identity management can leverage zero-knowledge proofs, verifiable credentials, and other technologies to maintain data privacy. Criminal activity enforcement should follow today's existing legal model where financial institutions have oversight over their customers and the government can only access customer user information through a subpoena. Really? Again, depending on who's hosting your account. I mean, everybody would need to be like Scrooge McDuck and have their own vault with all their money in it. But if you did that today, they think you're like a drug dealer or something. Why you have all this cash? Why is it not in a bank account? What are you doing? Where does it come from? The DDP's view that privacy is a fundamental tenet of a digital dollar has been shared by some in the U.S. government, but bold leadership is needed to ensure that a U.S. CBDC preserves all forms of privacy. We don't have bold leadership, not in the crypto space in the United States. Both the Democrats and Republican leaderships are in attack mode on crypto. So there is no bold leadership right now. The Federal Reserve Board stated that privacy protection is critical in its consideration of a U.S. CBDC and noted that a digital dollar would need to strike an appropriate balance between preserving individual privacy rights and deterring criminal activities. Members of the U.S. Congress have strongly voiced support, not only for privacy protections in a potential CBDC system, but also for protections of civil liberties and other rights. That is true. The DDP's first pilot found that individual privacy, which is the focus of the original privacy tenet, is not the only form of privacy that must be protected. In a wholesale settlement model, transactions are executed at the organizational level, not an individual one. Instead of preserving an individual's privacy, a CBDC network would need to ensure the confidentiality of data relating to the transactions of participating organizations. How are you going to do that? You know, what's more valuable than money is data. And who are they selling that data to? Who has access to it? Research on technology design choices to enable a CBDC system with privacy protecting features from day one is promising. In November 2022, the BIS Innovation Hub Swiss Center announced the launch of Project Turbillion. I've never heard of this. Turbillion. In coordination with David Chaum, a noted cryptographer and founder of eCash, which was a form of privacy protecting digital cash that didn't work. That was piloted in the 90s. Chaum is a computer scientist and cryptographer who made significant contributions in the fields of cryptography and privacy. Project Turbillion aims to reconcile trade-offs between privacy, cyber resiliency, and scalability in CBDC systems by combining techniques such as blind signatures. The United States government doesn't like that. Blind signatures and mixed networks, no, they ain't going for that, but I want to look this one up. Look up Project Turbillion. Okay. DDP co-founder Daniel Gorfine and former acting Financial Crimes Enforcement Network FinCEN director Michael Mosier co-wrote an article that introduced a greater degree of nuance to the current discussion in juxtaposing individual privacy with national security. The authors point to technological innovations, namely privacy-enhancing technologies, PETs, that enable the confirmation of critical identity. I need to know that term. PETs stands for privacy enhancing technologies. That might be something to invest in. Privacy enhancing technologies. These cryptographic techniques, such as zero-knowledge proofs, homomorphic encryption, and multi-party computation, can verify encrypted propositions without revealing the underlying information. Okay? Some cryptographic techniques that hold promise in the context of CBDCs include zero-knowledge proofs, or a type of cryptographic protocol that allows one party, the prover, to prove to another party, the verifier, that they know a certain piece of information without revealing any information about the actual content of that information. ZKPs are useful for many applications where it is important to preserve precision. Homomorphic encryption, I've never heard of that word before. Homomorphic is a type of encryption that allows mathematical operations to be performed on encrypted data without the need to decrypt it first. Multi-party computation is a type of distributed computing in which multiple parties with their own private data can jointly compute a function over their inputs without revealing their inputs to each other. Differential privacy is a system for publicly sharing a dataset information by describing patterns of groups within the dataset while withholding information about individuals in the dataset. Additional research is needed to understand the potential trade-offs between privacy and security concerns. Furthermore, additional specific discussions are necessary regarding the different types of privacy and the design choices necessary to achieve them. Further questions about the privacy tenet include which innovative data privacy techniques, ZKPs, homomorphic encryption, may be employed to enable US CBDC privacy without sacrificing necessary oversight and anti-crime measures. And how might commercial banks leverage existing data privacy processes to comply with laws like the EU's General Data Protection Regulation and Southern California Consumer Privacy Act? Monetary policy neutral. The DDP previously stated and stands by our tenet that a US CBDC will not impact the Federal Reserve's ability to affect monetary policy and control inflation. A CBD, you know what they could do? You know how you can control this? What if you had the CBDC that instead of printed more, burned it? But you would have to go completely to a cashless society. Well, no, you wouldn't. No, you wouldn't. You would just burn excess and out in circulation digitally. And what that would do was make the money that's in your possession more valuable, not less valuable. Every time you print more money, the value of your dollar goes down. What if you are burning CBDCs? The excess, the value will go up. Further questions on the monetary policy. Are there opportunities for a digital dollar to enable real-time analytics and deeper economic analysis on the health of the U.S. economy? How would a digital dollar impact the transmission effectiveness of monetary and fiscal policy objectives? Continued private sector innovation. Yes, the DDP strongly believes that a digital dollar could and should act as a catalyst for innovation. A digital dollar should not be antithetical to the development of private sector initiatives such as stablecoins. A tokenized digital dollar could serve as an underlying asset network upon which industry participants could provide unique and customized services like digital wallets, banking capabilities, stablecoins, and automated payment information. Moreover, fintechs and other well-regulated non-banks would have an opportunity to develop a variety of services layered on top of digital dollar distribution. One important potential use for a digital dollar is to serve as a currency. What is that? Let me read the sentence again more slowly. One important potential use for a digital dollar is to serve as the currency for the metaverse. Checkmate. Where's the river of money pointing? The metaverse. The metaverse, a term coined by Neil Stephenson in his 1992 novel Snow Crash, refers to a virtual shared space which is typically created by the convergence of multiple virtual worlds, augmented reality, and the internet. When considering the growing popularity of the metaverse as a concept among the general public and investors, it is crucial to highlight the potential for a digital dollar to serve as the cache of the metaverse and a fundamental building block for new payment infrastructure built for a Web3 future. I already wrote that down. I got to write courses on Web3. Now, further questions about this is which collaboration model should the private sector embrace to build a robust US CBDC network? What is the role of central bank money in establishing new payment rails for the metaverse? All right, I got those questions as well. That stood out to me. More research is needed. The Digital Dollar Project will continue to evaluate its champion model as CBDC research and experimentation evolve. Many questions related to DDP tenets, such as privacy and financial inclusion, require more research. The DDP will continue to support a data-driven decision-making process for a digital dollar by executing research and facilitating conversations with the private sector, policymakers, academics, and other relevant stakeholders. The tenets of technology decisions and design choices driven by functional needs and future-proofing the architecture through flexibility both require significantly deeper exploration. Additional questions around the technology decisions and design choices driven by functional needs tenet include: how will data gathered by the DDP and similar initiatives be effectively shared with the public sector to define and prioritize functional needs? How might the DDP help regulators understand and evaluate the rapidly innovating landscape that is DLT? Blockchain. DLT stands for Distributed Ledger Technology, blockchain, and tokenized payment mediums as part of the broader effort to consider an effective digital dollar. Additional questions around the tenet of future-proofing the architecture through flexibility include: how might the private sector collaborate to establish a digital asset foundation that can manage dynamic policy and design decisions on an ongoing basis? How could we guard against security risks and threats from the advent of improved computing technologies? Global CBDC standards will the United States lead? Let me see how this is panning out here. All right, yep. Will the United States lead? No. Global standards are critical to ensure international interoperability, transferability, consistency, and safety across various industries. In the technology field, for example, global standards help ensure that different devices and systems operate seamlessly while meeting agreed upon safety and performance levels. Global standards can reduce barriers and enhance international cooperation in other fields, such as trade and finance. In each of these fields, global standards often promote societal values, including democratic values such as privacy, free enterprise, and economic liberty. The United States has been a leader in developing global standards for the fields of technology, trade, and finance, among others. Its crucial role in the global financial system dates back to the enactment of the Bretton Woods Agreement in 1944, where representatives from 44 countries signed an agreement that established rules and principles that guided international financial relations for several decades following World War II. The problem is, most politicians don't even know what the Bretton Woods Agreement is. Politicians of today. We got politicians that don't know their own freaking history. I briefly broke this down. I don't remember if it was last week or before, but why the United States is still in the position it's in the world after World War II. Donald Trump wanted to kill the Bretton Woods Agreement, which is a huge mistake. A huge mistake. And let me just school some of you guys on this. And it might go over the heads of some of you. That's okay. But at least you're hearing it. There's a reason. It's not about that the United States is policing the world. There is a reason we provide aid and we send money abroad to protect democracy. Because there's only two things that's going to end up happening. Either we send money or we're going to send our boys. There is no other way. We tried isolationism twice. And both times we tried it, it failed because the world is now connected. We got the Pacific and the Atlantic on either side, Canada to the north, and Mexico to the south. So we're not in fear of any invasion. But financially, our economy is so connected to the rest of the world. We need each other. And the moment we attempt to go isolationism, we're going to lose financially. And also, we're also exposing the rest of the world up to millennia-long conflict. The United States is only 246 years old. 246 years old. Europe had wars longer than that amongst themselves. And the moment we allow the rest of Europe, Middle East, and Asia to operate amongst their own interests, it will inevitably lead to conflict, which is what caused World War I, which is what caused World War II. The United States stepping in, we have prevented a third world war. See, there was only 20 plus years difference between World War I and World War II. But since then, what are we, 80 plus years removed? 70, almost 80 years removed from World War II? We haven't had a major world conflict since then. If America goes back to isolationism policies, for those of you who wonder, why are we sending money to Ukraine? We could send it to Ohio or right here in our own backyard. Because if we don't, we will pay for it later, tenfold. It is in our national interest, but isolationists don't see it that way. So it's not a matter of right or wrong. It's a matter of what are the consequences of our actions. If we decide to go isolation, we can do that, but it's going to come with a cost later on. Are we willing to pay for that later on? Could we have just ignored World War II? We called it Europe's war back then. We don't want to have nothing to do with that. Let Europe fight amongst themselves. They've been fighting before we've been around. It's none of our business. Next thing you know, Pearl Harbor gets bombed. And what if the wrong side takes over all of Europe? And then they got their eyes set on the United States, Canada, Mexico. It's inevitable. So anyways, importantly, the U.S. dollar is the global reserve currency. Central banks worldwide hold dollars as part of their foreign exchange reserves and benefit from its liquidity and stability. They can use these reserves to stabilize their own currencies and to facilitate international trade and finance. The dollar's role is further bolstered by the influence of U.S. financial institutions. In recent years, we have seen some countries develop alternative payment rails that could be used to circumvent sanctions imposed by the United States and its allies, as well as other rules and norms that govern the current financial system. It is possible that CBDCs could be used to avoid financial sanctions. Depending on, how? It is possible that CBDCs could be used to avoid financial sanctions? Depending on how they are designed, depending on how they're designed and implemented, making it imperative that the U.S. government, they're talking about other nations doing this. I agree. So it is imperative for the U.S. to maintain status quo, to maintain our power. We've got to lead the way on this. We need the rest of the world to still be dependent on the U.S. currency. Now, that's a selfish thing to say. If I was from South Africa, if I was from Nigeria, if I was from, the UK is still part of it, if I was from Saudi Arabia, Iran, screw the United States. I don't want y'all to be the world leader in this, but I'm from America. So as an American, I'm looking for America's best interests. I think the world has been better off with America leading the way, it depends on who you talk to. But pulling the microscope back, we haven't had nuclear war yet, have we? So it is possible that CBDCs can be used to avoid financial sanctions. Depending on how they're designed, it's imperative that the U.S. government consider ways to maintain the use of the dollar in digital global payment systems and develop a strategy related to the use of alternative payment systems. I agree. However, the United States should not engage globally from a purely defensive posture. The United States should offer forward-thinking leadership. I agree. On issues such as interoperability that will play a large role in the future of money. The future of money. One thing that is inevitable is that money always changes. So we're now looking at the future of money. U.S. needs to play a large part in this. Interoperability is particularly important when designing CBDCs. CBDC interoperability can prevent market fragmentation, increase payment provider competition, and achieve broad adoption. While many countries are developing CBDCs in silos, likewise with private sector companies developing stablecoins, the United States should consider the dollar's global utility when designing a CBDC to achieve global economic efficiencies, as the dollar is a payment mechanism that underpins and provides liquidity across international markets. As of January 2023, it is increasingly clear that the global CBDC developments are heading in the direction of silos, a concerning trend. I agree with that. But ultimately, it's going to be combined, especially when the IMF gets involved. A CBDC could enable a translation layer between multiple CBDC networks and technology platforms, creating a shared language domestically and globally. This transferability across traditional and DLT-based networks would streamline transaction data sharing across many use cases. In order to achieve this level of interoperability, CBDC development should consider emerging token standards to connect future CBDC networks. The United States can collaborate with corporations, regulators, government agencies, and academics globally to advance technology standards and other layered facets, such as identity frameworks and consumer protections. By taking a leading role in interoperability, the U.S. will be able to set global standards in the internationalization of CBDCs and protect against countries that do not serve U.S. interests. If other countries develop widely adopted CBDCs that become the de facto standard for international wholesale and retail payments, they may have a head start in setting global standards for the future of money. If I was a leader of another country, this is like playing football. If you're a football coach and you see an opening that the other team leaves open, are you just going to sit back and wait for them to, catch up? Or is this your time to shine? Is this your time to step in? Like a quarterback who's a backup quarterback and the main quarterback gets injured, now you get to play. You're going to play your best. So if I was one of these other countries, specifically China, I would see the United States being slow on this as an opportunity to step in. Our allies, Japan and the UK, also see opportunity. They're like, all right, if the United States is not going to take the lead, we will. We will be the main power in the West, not the United States. This is interesting. The United States, let's say, China may be well positioned to begin setting the global CBDC standards agenda following its large role in driving Project Enbridge, If Project Enbridge marks the start of a renewed effort to redirect the global financial order away from the current US-led system, it may constitute a critical inflection point that necessitates a dynamic response. That is a national threat. Let me mark that down. I'll look up Project M Bridge. I don't think you guys understand how powerful this statement is right here. I'll read this last sentence again. If Project M Bridge, that's set by China, marks the start of a renewed effort to redirect the global financial order. The current global financial order is the United States, away from the US-led system. It may constitute a crucial inflection point because that means the United States, for the first time since World War II, for the first time since before any of you were born, we're losing our main advantage. We only have two main advantages over this planet. We've got the biggest, baddest military the world has ever seen, and we've got the biggest economic might. Take away the economic might. I used the wrong finger. Take away the economic might, and the world is looking at us with the middle finger, saying, come at us. We dare you. This is very important. The United States today largely relies on its ability to leverage the dollar's outsized global role and the position of its banking system. Those who hold the money make the rules. If the U.S.-led global financial infrastructure is perceived as too slow and expensive in comparison to foreign alternatives, it is not unreasonable to anticipate that countries around the world will begin, and in some cases continue, the process of de-dollarization. Get that one in your heads. Because how is this going to impact you? If the rest of the world starts to de-dollarize, inflation, the value of your money starts going down. It's worthless because nobody else will buy our debt. And each and every single one of us, our wealth goes down like a rock. In 2022, a working group of distinguished experts in national security, finance, economics, central banking, technology policy, and computer science from the Hoover Institution studied the global implications of China's CBDC. Oh, I wish I was a fly in the room there. The working group's report analyzed the detailed the degree to which China has established a first mover advantage in not only the deployment, but also the technical underpinnings of CBDCs, while America is sitting on our ass right now. Stupid. The study also notes that the EC-CINI enhances China's ability to cement its international leadership of payment technology and innovation and adoption. This is why China already says war with the United States is inevitable. Because if China succeeds in this, which I think they will, the United States ain't going to stand for this. Look at our history. We will make moves to shut that thing down, which is going to be military conflict. United States is not going to go quietly in the night. Okay, understand this. As soon as we stop, see, here's what's happening right now. We're so what's the word to use? We're not focused. We're distracted, fighting each other. Where right now, Republicans and Democrats see each other more as an enemy than foreign nations. Where one side would rather align with another nation if it falls in their interest than their own fellow Americans who believe in a different party. And while we're busy doing that with our heads stuck up our asses, these other nations are taking full advantage. And then when we realize it, here's what's going to happen. It's like 9/11. When 9/11 hit, if you understand the political environment of the U.S., in 2000, before 9/11, right after Bush won and Al Gore lost, it was a similar situation. Is Bush the legitimate president? Was the election stolen? Florida and the stupid hanging chads? It went to the Supreme Court. But at the time, we still had old school politicians that were old school. Al Gore conceded. He didn't want to, but for the good of the nation, he conceded. And he had a more of a fighting chance to continue to fight it than the last administration in this case. It went to the Supreme Court. But Al Gore also knew, had he won his own freaking state, he would have been president. He lost his own state. All right, you lost. Give up. Go home. But before 9/11, hell was coming down on George Bush. And when 9/11 happened, all Americans, regardless of your political affiliation, came together behind the president, Republican or Democrat, because we saw an external enemy that was hell-bent to kill us. We need to kill them. And that sparked a wave of crap from unfinished Gulf War I, Gulf War II, Afghanistan, and everything else because of that event. And the other world said, we just awoken a sleeping giant. But that was 20 plus years ago. This is why I said there's going to be another crisis that's going to happen in the United States. That's going to bring all Americans together to another perceived enemy that's not here, overseas. And I think that enemy is being set up to be China. And China knows it as well. They came out with a report. They said it's inevitable that there's going to be a military conflict with the U.S. Will this be a regular military conflict? Will it be a nuclear conflict? The study also notes that this ECNY enhances China's ability to cement its international leadership of payment technology and innovation and adoption, set economic norms and technical standards that align with its authoritarian governance system. The increase its ability to undercut the traditional dominance of the US dollar as a source of geoeconomic and strategic influence. All right, just for you guys that might be scared, I'll say this at first. It will not be a direct US-China conflict. It will be used through satellites. You'll see a conflict over Taiwan, the US backing Taiwan. You'll see a conflict over North Korea and South Korea. You'll see a conflict having to do with Iran, where Iran will be backed by China and the United States on the other side, backing Iraq or something. It'll be proxy. The big powers don't want direct war. That's why you don't see the United States and Russia going at it. They're using Ukraine to fight as their proxy. So, but this is scary. Scary times though. Conclusion. A call to action. Wait. How long is this here? All right, here's what I'm going to do. Because I'm running out of time. I'm going to conclude this conclusion on Monday. Part of our inner circle. And it might take 2 days because I still want to cover crypto news. So at the end of crypto news, we'll start covering this conclusion. So you've got to be in the inner circle to get the rest of this. I know I'm doing this free right now, but those of you who want to get the rest of this, you've got to be in our inner circle, plug into our crypto talks that we do Monday through Thursday. And if you have not done so, to do that, all you have to do is register. Go to ilcachallenge.com/sales page, ilcachallenge.com/sales page. And you can be in our inner circle and get the rest of this groundbreaking, earth-shattering news about the change of our financial democracy and system. All right, so what's coming up next? Well, tomorrow is Sunday, so I'm going to be watching the charts very, very carefully to see where the USD now. I will be highlighting as far as and I in the past hour. Yeah, all of them went back red. Okay, got to watch this closely. So tomorrow night at 8 p.m. Eastern, 5 p.m. Pacific, 8 p.m. Eastern, 5 p.m. Pacific, I will be hosting Starvara Talk with Brandon Ivy. I'm getting ready, guys. I'm getting my old gaming headset out, ready to go. I got my VR. That's it. I'm going to be buying more. I'm playing more games. Even my son was like, "Yeah, you're not playing the NBA 2K too much." I said, "No. I'm getting my head back into the MMOs, that type of game." So I'm ready for this, and we're gonna have a good week with Starvar next week. And if you have not gotten a node yet, I strongly advise get yourself prepared to get that node and just sit on it. This is not get rich quick. This is get rich long. All right. So with that, I'll be posting that link into our ILCA Telegram group later on tonight, and I will see you all tomorrow night. Bitcoin Brandon out. Bye-bye.